With these few things, you can increase your win rate and experience thousands of % profits using these few ways. What is a moving average index? You can calculate the moving average indicator on any data set that changes over time, but in technical analysis, its most common use is with asset prices. A moving average, MA, is a continuously calculated value of the average price over a specified time period. The moving part of the name exists because we calculate a new value as each time frame progresses, so that our average value changes as the price changes. So, for example, possible from the 30-day moving average, let's use the average value is the average price of the last 30 days. In other words, we add up each of the 30 closing prices and then divide by 30. This value is calculated every day, discarding the oldest value in the dataset in favor of the most recent day. The effect of a moving average is to smooth out price fluctuations. Long-term moving average indicators help traders stay focused and allow them to quickly understand if there is a trend and if so. Existence. What is its direction? The long-term moving average indicator keeps traders on the right side of the financial markets. This helps traders avoid risky reversal setups and allows them to enter setups that match the overall trend. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Strategy 3: Moving Origin. An example for the entry point of a sales transaction. Sell transaction. 21 MA and 55 MA should cross 100 MA from top to bottom in 4 hours. The order of the moving origins is as follows. MA 100 is the highest line and farthest from the candlesticks, MA 55 is the middle line, and 21 MA is the bottom line and closest to the candlesticks. In this case, when the 3 moving averages have crossed, if the entry position is reasonable from the point of view of technical analysis, the conditions for entering the transaction are ready. And the points that can be important are the first points that should be paid attention to when using the simple moving average indicator. It is related to the issue of personalization of this indicator. In interpreting the data of this indicator, you should know that if the moving average takes an upward direction, this means that the price of the digital currency in question will increase, and it is the best time to buy digital currency and profit from such a trend. But if the movement of the trend line is downward, this means the beginning of a downward trend in the market, and it is better to think about exiting the market. On the other hand, you should know that the longer the time period considered for moving averages, the smoother the obtained simple moving average will be, and due to the elimination of random fluctuations, it will give a clearer view of the current situation and the price trend of the digital currency in question. But the shorter these periods are, we will see more price fluctuations in the price trend. Generally, using the simple moving average indicator, 2 trading patterns are formed in the market, which are as follows. Golden cross. This trading pattern occurs when the short-term SMA indicator breaks the long-term SMA line upwards. When you encounter such a situation, you should know that we are about to start an increasing price trend. Of course, the size of the market should not be neglected in this review in order to protect our capital from fake outs. Death cross. If the 50-day simple moving average crosses the 200-day moving average downward, then it is said that we are facing a death cross, and we should prepare for a downward trend. By drawing the important support and resistance levels of the market, using blocking orders, for example, we are in an upward trend, and when the price reaches our important support range, we create a range for us using lower lows and a lower price, and then we should use these areas as very strong support. But when these areas are used, it means that liquidity is removed from these areas. The rule that you must follow is that when a level is broken, we must be very patient. It may be an important trap that the price wants to hit, but if the level can be maintained, first we need to look for candlestick confirmation. Then we look for cross SMA. If SMA confirms late, wait and get 0.5% by dropping FIBO, and then you can correct and get a good buy.